Silver just erased a slam attempt and ripped past $88. Gold is at $5,200, up $140 in a single session. And I need to tell you something that I found while researching this video that actually scared me. China's largest silver recycler is paying $96 an ounce right now for scrap. For used silver, not new silver, not investment grade bars, used, recycled, melted down scrap silver. $96. And China's futures exchange is still closed for New Year. It reopens tomorrow. If the price that recyclers are paying for garbage silver is $96, what do you think happens when Shanghai opens and real buyers start bidding on real silver? I'll tell you what I think happens, and I don't think most people are ready for it. But before I get to that, I need to walk you through everything that happened today. Because the last 12 hours have been an absolute war zone for precious metals. And there are 4 things happening simultaneously right now that are all pointing in the same direction. I'm going to break each one down, and by the end of this video, you're going to understand why I believe silver is heading to $100, and possibly much sooner than anyone expects. Let me start with what happened to silver today, because the price action tells you everything you need to know about where the power is right now. Silver opened around $84. Within the first few hours, it got slammed hard. Someone or something pushed it down below 86, after a spike to 87. Classic pattern. You've seen it before if you've been watching my videos. Big sell order hits the futures market. Price drops fast. Looks like the rally is over. Weak hands panic, sell their positions. And then what happens? The price comes right back up. Not slowly, violently. Silver ripped from 85 to 88 in what felt like minutes. That's not just a bounce. That's a message. The message is simple. Every time they try to push silver down, physical buyers step in and buy the dip. The paper market can slam the price all at once. The physical market is saying, no, we're buying at any price. Get out of the way. The physical market is in charge now. Real buyers with real money who want real metal are stepping in every single time. And they're stepping in faster and bigger than ever before. I tracked the intraday chart today, and here's what I saw. The dip to 85 of 80 happened around the London session. Classic timing for a slam. London traders tried to set the tone before New York opens. Silver dropped almost $2 in minutes, and then it reversed hard. By the time New York opened, silver had already recovered most of the loss. By early afternoon, it was at 88 new highs. The slam didn't just fail, created a launch pad. Welcome to the hidden economy. If you're new to channel, hit subscribe. I'm covering silver and gold every single day. What I'm about to show you next is the kind of data that most channels don't even know exists. One click and you'll never miss it. So, let me show you why the slam failed. And this is where it gets really interesting. I pulled up the COMEX delivery data from Friday, and the numbers are getting harder and harder to ignore. 6 new silver delivery notices were issued on Friday alone. That brings the month to 8 total for February to 4,695 contracts. Now, each contract is 5,000 ounces. So that's 23.475 million ounces of silver that have been called for physical delivery in February alone. 23.5 million ounces in 1 month being pulled out of the system. Here's what makes this number scary. We are now just 3 trading days away from March 1st notice day. That's the day when anyone holding a March silver futures contract can demand physical delivery. And March is a major delivery month on COMEX. The open interest in March contracts is massive. If even a fraction of those contract holders say, I want my silver, not cash, not rollover actual metal, the COMEX is going to have a serious problem. I looked at who's taking delivery. HSBC stopped 3 contracts Friday, JP Morgan stopped 2, ADM issued 4 and stopped 1. These aren't retail traders. These are the biggest banks in the world. And they want the metal, not the paper, the metal. When JP Morgan is taking physical delivery of silver at $88, that tells you something about where they think the price is going. Banks don't take delivery for fun. They take delivery because they believe the metal will be worth more than the cash. This connects directly to something I've been tracking for weeks. The COMEX vaults have been draining steadily. The registered inventory, that's the silver actually available for delivery, has been falling month after month. Every time a delivery notice gets issued, metal leaves the vault, and it's not coming back because the people taking delivery are not selling it back into the system. They're holding it. They're storing it privately. They're moving it off exchange. The supply that's supposed to back all those paper contracts is slowly disappearing. And the market is starting to notice, and I'll be straight with you. When I first started tracking COMEX data months ago, I thought the squeeze narrative was overhyped. People on Twitter screaming about vaults draining while the price was barely moving. I thought they were seeing what they wanted to see. But now I'm looking at the same data, and I can't argue with it anymore. The numbers are real. The drain is real, and it's accelerating. I was wrong to dismiss it early, and I'd rather tell you that than pretend I saw it coming all along. I want you to think about what this means mathematically. The March contract alone represents hundreds of millions of ounces of exposure. The registered inventory at COMEX is a fraction of that. If even 10% of March contract holders demand delivery, there isn't enough metal, full stop. And when the math breaks on COMEX, prices don't adjust gradually, they adjust violently. We saw it in January, we saw it in October, and we're about to see it again in March. But here's what really made me sit up. Earlier this year, in the first week of January, 33 million ounces of silver were physically withdrawn from COMEX in just 7 days. 26% of registered inventory gone in 1 week. JP Morgan alone issued 99% of the delivery notices during that period. 8.1 million ounces through 1,600 contracts. I read that number 3 times because I didn't believe it. JP Morgan, the same bank people love to hate in the silver community, taking delivery of 8 million ounces in 1 week. If that doesn't tell you where this is going, I don't know what will. That was January. We're now heading into March with even tighter supply and higher prices. The squeeze is not over. It's intensifying. Now let me move to the second story, and honestly, this is the one that shocked me the most. If you think COMEX draining is scary, wait till you hear what's happening in China. I found a screenshot from Art and Gold. This is China's largest precious metals recycler. Think of them as the biggest scrap dealer in the country. They buy used silver from industrial waste, old electronics, recycled materials, and they melt it back down into usable form. On Monday, their buying price for scrap silver was 21.286 yuan per gram on the sell side. When you convert that to dollars per ounce, it comes out to roughly $95 to $96. Let me say that again. China's largest recycler is paying $95 to $96 an ounce for used, recycled, scrap silver right now. Today, stop and think about what that means. The international spot price for brand new investment grade silver is 88. China's recycler is paying more for scrap than what you can buy new silver for on the international market. That's not normal. That's a premium of almost 10% for junk silver. That tells you that inside China, the physical shortage is so severe that recyclers are willing to pay above global spot just to get their hands on any silver they can find. I spent a lot of time thinking about what this means. And here's my honest take. When a recycler pays more than spot for scrap, it means one of two things. Either they have buyers lined up who are willing to pay even more, or they're afraid they won't be able to source metal at all in the near future. Either way, the signal is the same. Physical silver inside China is extraordinarily tight. And the world hasn't priced this in yet because the Shanghai Futures Exchange, the SHFE, has been closed for Chinese New Year. It hasn't been trading. Chinese futures traders haven't been able to react to any of the events of the past week. The Supreme Court ruling, the new tariffs, the Iran deadline, silver going from 84 to 88. None of it has been reflected in Shanghai prices yet. The SHV reopens tomorrow, Tuesday's session. And this is what I can't stop thinking about. Think about what happens when Chinese traders log in and see that silver has moved 8 to 10% since they last traded. Think about what happens when they see that their own recyclers are paying $96. Think about where they're going to start bidding. My honest expectation is that silver opens in Shanghai well above $90, possibly above $95. And if that happens, it creates a feedback loop where the Shanghai price pulls the international price higher, which then creates more urgency in the physical market, which then pulls the price higher again. There's something else about China that nobody is connecting, and it blew my mind when I put the pieces together. Since January 1st, 2026, China has reclassified silver as a strategic material, same category as rare earths. Only 44 companies have export licenses now. To qualify, you need annual refining capacity of at least 80 tons and a credit line above $30 million. That wiped out hundreds of smaller exporters overnight. And China controls 60 to 70% of global refined silver exports. So when China restricts silver exports and their domestic recyclers are paying $96 for scrap, that metal is staying inside China. It's not flowing to London. It's not flowing to New York. It's being consumed domestically by solar manufacturers and electronics companies that need it to keep their production lines running. The rest of the world has to source silver from an ever-shrinking pool, and that pool is draining fast. This is the part that I think is most important. I've been saying for weeks that the gold-silver ratio is compressing, that silver is outperforming gold on a percentage basis. Today proved it again. Gold was up 2.76%. Silver was up 3.94%. That gap matters because it tells you that money is flowing into silver faster than gold. And when the ratio compresses, it means the market is waking up to the idea that silver is undervalued relative to gold. We're at about 59 right now on the ratio. A few weeks ago, we were at 65. That's a massive move in a very short time. Now, let me get to the third thing because this one made me actually angry when I read it. Trump went on social media and posted what I can only describe as a rage tweet. He said, any country that wants to play games with their ridiculous Supreme Court decision will be met with a much higher tariff and worse, especially those that have ripped off the USA for years and even decades. Buyer beware, all caps exclamation marks. Signed, President Donald J. Trump. Here's the context, and I need you to understand this because it directly affects your gold and silver. The European Parliament announced today that they are freezing the ratification of their trade deal with the United States. The Turnberry Agreement, which was signed last year, was supposed to set tariffs at 15% for most EU exports to the US. The European Parliament's Trade Committee had been scheduled to vote on it tomorrow. Instead, they called an emergency meeting and said, "We're suspending everything until we get legal clarity from Washington." Their Trade Committee chairman called it pure customs chaos on the part of the US government. And the lead negotiator for the European People's Party said, "We have no other option but to delay." I want you to hear those words again. No other option. Let me put this in perspective because I don't think people understand how big this is. This is the second time the EU has frozen this trade deal. The first time was when Trump threatened to annex Greenland. He backed down and they restarted the process. Now they've frozen it again because of the Supreme Court ruling and the 15% tariff. 2 freezes in 2 months for the largest trade relationship on the planet. That is not stability. That is a mess. And when things get messy, gold wins. Trump's response to the EU freezing the deal was that tweet. Not diplomacy, not negotiation, a threat, much higher tariffs, and worse. I want you to let that sink in for a second. The European Union is the largest trading partner of the United States. Over 20% of all U.S. imports, over $300 billion a year, and the President of the United States is threatening them on social media after his own Supreme Court just told him his tariffs were illegal. I don't know about you, but when I read that tweet, I thought, this man is not backing down, he's doubling down. And that changes the math for gold. I sat with this for a while. And here's what I keep coming back to. This is not the behavior of someone who is looking to de-escalate. This is escalation pure and raw. And every single escalation in this trade war has been bullish for gold and silver. Every single one. Because escalation means uncertainty. Uncertainty means risk. Risk means capital flows into safe haven assets. And the safest haven assets on the planet right now are gold and silver. Think about what a European central bank is thinking right now. They signed a trade deal. The Supreme Court blew up the legal framework it was based on. A new tariff appeared under a different law. The president raised it to the maximum within 24 hours. And now he's threatening to go even higher and worse. If you're managing reserves for a European country, what do? You buy gold. You buy it today, you buy it tomorrow. You buy it every day until the chaos stops. Because the chaos is not stopping, it's accelerating. Let me connect all 4 of these stories because when I was putting this video together, I kept going back and forth between the tabs on my screen. COMEX data, wrong tong, gold screenshot, Trump tweet, silver chart. And at some point, it hit me. These aren't 4 separate stories. This is one story told from 4 different angles. COMEX is emptying because physical buyers don't trust paper anymore. They want the metal in their hands. China's recyclers are paying above spot because the shortage inside China is real and desperate. Trump is escalating the trade war because he lost in the Supreme Court, and his response to losing is to hit harder. And silver is erasing every slam attempt because the people buying are stronger than the people selling. I've never seen all 4 of these forces line up at the same time. Not once in the months I've been covering this market. This is different. You can feel it in the price action. Put all 4 together and you get one conclusion. Silver is heading to $100, and I don't think it takes very long to get there. Here's my honest view on the path from here, and I want to be careful. Because I'm not trying to pump anything, I'm trying to give you my real read on the data. Silver is at 88 right now. The next major resistance level is 92. That was a level we touched briefly in January before the pullback. If silver breaks through 92 and holds above it, the path to 100 opens up fast. And I mean fast. There's very little resistance between 92 and 100 because silver moved through that zone so quickly in January that it never built a real trading base there. Now, I personally believe silver gets to the $95 to $100 range soon. Possibly this week if China's reopening creates the kind of bid I'm expecting. But I want to stress the 92 level. If silver breaks 92 and closes above it, that's the confirmation. That's the signal that says this isn't just a bounce. This is a new leg higher. Watch 92. That's the number. There's something else I want to point out that nobody is talking about. The Silver Institute released their 2026 outlook earlier this month. They're projecting a 6th consecutive year of supply deficit. 6th. Let that number sink in. 6 years in a row, the world has eaten more silver than it produced. The estimated shortfall for this year alone is 67 million ounces. Where does that silver come from? The vaults? The same vaults that are already draining. And here's the thing that keeps nagging at me. 67 million ounces sounds like a number on a page, but put it in context. That's almost the entire annual output of Mexico. the world's biggest silver producer. It's like saying we need an entire extra country's worth of silver just to meet demand. And that country doesn't exist. I keep waiting for someone to give me a bearish argument that actually holds up. Show me where the supply is coming from. Show me the new mines. Show me the substitute technology. Show me the recycling capacity that fills a 67 million ounce gap. Nobody can, because it doesn't exist. The bears talk about price being too high. But price being too high doesn't create silver. Only mines create silver. And the mines aren't producing enough. They haven't been for 6 years. And new mines take 7 to 10 years to build. I was reading a report that said Samsung actually signed a deal with a Canadian mining company to lock up 100% of a mine as silver output for 2 years. Not buying on the open market, not buying futures, locking up the entire mine. I want you to think about what that decision means inside Samsung's boardroom. Some executives stood up and said, "We cannot rely on the market to supply our silver anymore. We need to go directly to the source. When Samsung is scared about silver supply, you should be paying attention. When the biggest electronics manufacturer on the planet is bypassing the entire exchange system to lock up silver at the source, the message is crystal clear. Physical silver is running out, and the smart money knows it." Let me talk about what all of this means for gold, because gold had a monster day too, and I don't want to ignore it. Gold hit 5220, up $140. I actually paused my research when I saw that number flash across my screen, 2.76% in a single session. And the interesting thing is that gold's move was driven almost entirely by the tariff chaos and the Trump tweet, the EU freezing the trade deal, the threat of even higher tariffs. The legal uncertainty around Section 122, all of it feeds the gold narrative because gold is the ultimate anti-chaos trade. When the system breaks down, when the rules change overnight, when the most powerful court in the country says your trade policy is illegal and you respond by escalating further, gold goes up. There's no better environment for gold than this. And I say that as someone who has been bullish for months, even I'm surprised by how fast it's moving. Gold is going to 5,500 before this cycle is over, maybe higher. Goldman Sachs has 5,400 as their year-end target. They're conservative, but here's what I want you to focus on. The gold-silver ratio, it's at 59 right now. A few weeks ago, it was 65. That compression is happening fast. And for silver holders, the ratio is everything. If gold goes to 5,500 and the ratio compresses to 40, silver goes to 137. If it compresses to 35, silver goes to 157. I'm not saying those numbers happen this month, but the direction is clear. And with China reopening tomorrow and COMEX under pressure and Trump escalating, the compression could accelerate faster than anyone expects. Let me be real with you about risk, because I always want to be straight. The risk right now is a deal. If Iran reaches a nuclear agreement, if the trade war suddenly de-escalates, if Congress extends Section 122 smoothly, gold and silver could pull back maybe 5 to 8%. I don't think that kills the trend. I think it creates a buying opportunity, but I want you to be prepared for volatility. Silver moved from 117 to 77 in a single week last month. It can move fast in both directions. So if you're holding, hold with conviction. Don't panic on a $3 dip when the fundamental case points to triple digits. The other risk is a COMEX rule change, and I've seen this play out before. So let me tell you exactly how it works. If COMEX raises margin requirements or changes settlement rules to allow more cash settlement instead of physical delivery, it could take pressure off the vaults temporarily. They did this in January. They hiked margins. Silver pulled back. But here's what I noticed. The physical shortage didn't go away, and the price came right back up within weeks. Rule changes are band-aids on a structural wound. They buy time. They don't fix the problem. And every time they use a band-aid, trust in the paper market erodes a little more. Now, I want to end with something that's been on my mind all day. Every week, I sit down and go through the data, the COMEX reports, the delivery notices, the price charts, the central bank buying, the trade policy updates, the military movements. And every week, the case for gold and silver gets stronger, not weaker, stronger. The debt is bigger. The deficits are wider. The geopolitical situation is more dangerous. The physical markets are tighter. And the price keeps going up. Not because of hype, not because of YouTube thumbnails, because the math works. The supply isn't there, the demand is locked in, and the world is getting more uncertain, not less. 4 months ago, I started this channel because I saw something that mainstream finance was ignoring, a structural shift in precious metals that was going to catch people off guard. Every single week since then has confirmed the thesis. Silver went from 30-something to 88. Gold went from under 3,000 to 52.20. And we're still in the early innings. I know that sounds crazy when you look at the prices, but compare them to the debt, compare them to the deficits, compare them to the amount of paper promises that can't be backed by physical metal. The prices aren't high. They're catching up. I'm going to list what's happening right now, and I want you to really hear each one. Silver at 88, with China's recyclers paying 96 for scrap. COMEX delivering 23 million ounces in a single month. Trump threatening even worse tariffs. The EU freezing trade deals. And Shanghai reopening tomorrow after missing a full week of chaos. And now, tell me, when in the last 50 years have you seen all of these things happening at the same time? I've looked. I can't find it. If there was ever a setup for $100 silver, this is it. And I want you to really think about what $100 silver means. Not just as a number on a screen. Think about what it means for the narrative. For the last 50 years, silver has been treated as a second-class asset, something that gold bugs buy on the side, something that mainstream finance ignores. Silver at 100 changes that conversation forever. It becomes front-page news. CNBC talks about it. Banks write reports about it. Fund managers who never owned an ounce of silver suddenly have to have an opinion on it. And that attention brings new money that hasn't bought yet, new money that sees the chart going from 30 to 100 and thinks, what if it goes to 200? That's how parabolic moves start. Not from the people already in the trade, from the people who aren't in yet. If you watched my Tavi Costa video, you know the long-term framework. The Dow-Gold ratio pointing to massively higher gold, the gold-silver ratio pointing to massive silver outperformance, the 3,147 theoretical ceiling that made the whole community lose its mind. You don't need to believe in that extreme number to make money. You just need to believe that the ratio is compressing, and it is right in front of us every single day. I said in that video that even my most conservative math gave me silver above $400 over this cycle. Today's price action makes me more confident in that math, not less, because the structural forces I described are not theoretical anymore. They're showing up in real data. COMEX draining, China paying premiums, Samsung locking up mines, the Silver Institute confirming a 6th deficit year. Every piece of evidence confirms the thesis. Tomorrow morning when Shanghai opens, the whole world is going to be watching. I'll be here covering it. If silver opens above 95 in Shanghai, I'm making a video immediately. You don't want to miss that. If you haven't watched my previous 2 videos, go watch them now. The silver short squeeze video explains the COMEX dynamics in detail. The tariff plus Iran video from earlier explains the macro backdrop. Links are in the description. Together with this video, those 3 form the complete picture. Drop a comment and tell me where you think silver opens in Shanghai tomorrow. Over 90, over 95, over 100. I want to hear your predictions. If you know someone who holds silver or is thinking about buying, send them this video. I'm not saying that for the algorithm. I'm saying it because what's about to happen in the next 48 hours could be the most important move in the silver market this year. And I don't want anyone in this community to miss it. This is the hidden economy. Stay sharp. Stay stacking.